This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
When I saw kind of those three signals, the gap, these imbalances here, I kind of knew that it was going to be go time to get into a position, and the probability that this was going to continue upward was low. Kind of when I saw that play out, I knew that we were going to get some type of rejection. I didn't know that it was going to be as rapid as this.
All right, folks, here we are on Trading Nut. We've got Blake in the house. We've just done an awesome podcast. Go and check out the link under the video to check that podcast out. Now, this guy is 700K funded. He's going to walk you through actually not a funded trade, but a trade that he took on his personal account, which made him about $1,000. So, Blake, welcome back to the show.
Oh, hey, happy to be here, Cam.
Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So I just want to walk through a trade setup that I took a couple weeks ago. This is going to be, I believe it was Thursday, August 17th. And so just kind of like prefacing things during the summers, I try to not trade as much or stay out of the markets altogether because of the low volatility that happens on NASDAQ and really just every pair. Like you see it across Forex pairs too as well. So I try to make the summers, enjoyable and not trade as much. So coming into the charts though for the week, the first thing that I want to do is get a better understanding of where the market's going to go, right? I want to develop my bias. And so this trade happened on Thursday, August 17th. And so really coming in, I want to understand where the market's going to go, right? So currently, we've really transitioned on this uptrend on NASDAQ 100. If you look at the daily time frame, we were getting higher highs and higher lows. So we broke structure right around here. And so there's a couple of the things here, but overall, my bias coming into the week was we were going to start to see lower prices on NASDAQ and really kind of flow back to an area of support down here that was outlined. And so because, I have this overall bearish bias, really each intraday setup I'm looking for each day, I'm really looking to grab price at the high of the day and really take it to the low of the day in this case. And so coming in, this candle right here is going to be where the trading action is. So if we break this down to a 1 hour time frame, the same thing. Like I said, I'm showing up to the terminal every day at around 8:30 just to kind of get a better understanding of my my daily intraday levels. And so really looking to take price action at the high of the day and trade it down to the low of the day. And so what I'm going to do here, just to kind of avoid some trading view hassles, is kind of break this down on this time frame. And so replaying here, if we replay this back to 8:30, this is about when I come to the charts every day. I'm really just looking to kind of get a better sense of what's going on in terms of my daily levels, and really just understand that usually after the market open is when I'm going to look to take a position and really wait for the market price to form the high or the low of the day. And so at this time, let me go ahead and play. One of the things that I do is first come to the counter and the table is really just noting daily structure before the open and just letting things play out until the open hits. And so I always look to take a position in the hour or in the 15 minutes to the window of 15 minutes after the open until about an hour, 11 o'clock. That's my position. And I'm really just looking for any types of break of structures that happen during this time so I can catch them and ride them to the trend. And so as we get closer to the 9:30 open, we'll start to make a note of any breaks of structure or any areas of resistance that price is bouncing off against. So getting closer to the open. And so we can stop right here. We noted that we broke structure at this level right here. And so for this trade, I was waiting for price to flow up to an area of resistance and reject after the open. The only reason I wait till after the open is because price a lot of times can go against your overall bias during this. And so the open is right here. Boom. And there's a concept so when I talk about concepts that I pulled from a lot of people, there's been a lot of mentors that I've had that have given me a lot of different reasons as to believe, I guess, in their trading style and pieces that I found beneficial. And something that I pulled that was really beneficial was the idea of a fair value gap, right? And so if you look here, you can see two fair value gaps that have popped up in here and here. And so basically, when the market opens up, I'm waiting for price to flow back into those areas here or here. And so I was able to catch the trade by flowing into this particular fair value gap. And then price has an entry near the open, near the high of the day. And at this point, I'm looking to take this trade to the low of the day, which is here. I believe I exited early just because my emotions, sometimes I get the best of me, but was looking to exit around this low here.
And how did you set your stop loss on that trade?
Yep. So stop loss always goes over my high of the day at that time. And so this is in line with my overall bias, right? So coming to the terminal, like looking for lower prices, right? So because I have a daily bias of, giving us lower lows and lower highs on the daily, and that bearish bias, coming in, and knowing that my intraday timeframes are going to give me a smaller bias or that same bias, but played out in a smaller time frame. When I started to see structure break, taking out these lows, it gave me a really good indication that price was going to line up with our overall trend. And so once I enter into my position here, then I'm really going to my higher time frames and getting a better sense of where price can go overall based on this time frame. And so usually, like, I'll exit my positions by there because I am more of a scalper, but I'll hop to my 1 hour, my 4 hour, and get a better sense of where I think price is going to go directionally. So not only am I giving myself a lot of cushion room by exiting early, but I'm also kind of just sitting around after that's over and waiting for my my overall bias to play out. And so that's exactly what we got right here. So just kind of letting things play out on the smaller time frames.
And so on that 1 minute entry, right? So I'm just going to play devil's advocate here. So it didn't quite get up to that fair value gap that you noted there. I mean, how did you get in the trade? Was it just it got close and you were like, I'm going to just enter at market, or how did that play out for you?
Yeah, so there's actually two on this play. So there's an imbalance from here to here, and then there's also an imbalance from here to here. And so I would have entered on normally I would have entered it on this one, but usually you want to expect that price is going to flow into the second one as well. So when I saw price just shy of that, actually a little bit, there you go, just shy of that, in between that, I thought in my head, I kind of knew that price was going to reject based on that. Just because it's playing in between two imbalances there. There's also, if you look closely, there's also a gap right here. And so we know that price is going to reject from those areas a lot of the time, especially when you see that on those intraday smaller time frame, 1 minute, 5 minute, 2 minute time frames. And so really we know that price moves, well, I guess we might not know that, but like if you trade with kind of a combination of technicals with market structure and then employing a little bit of smart money concepts as well, you can see that that price is going to reject from areas, is going to be gravitated towards areas of imbalance and reject away from those areas. And so when I saw kind of those three signals, the gap, these imbalances here, I kind of knew that it was going to be go time to get into a position, and the probability that this was going to continue upward was low, especially after our break of structure in this zone, and it's flowing in with the overall the overall trend as well. So kind of when I saw that play out, I knew that we are going to get some type of rejection. I didn't know that it was going to be as rapid as this. Um, usually, usually it's a little bit more, there's a little bit more fight, I guess, in the bulls as price is rejecting away from that point. But it was kind of in line with my overall bias and what I wanted to see. So once I go through my checklist that I kind of referenced before, and everything lines up, I'm pushing the button regardless. I don't even think about it. I just push the button.
And so how much time did you actually have to push the button? It would have been quite quick, I'm guessing.
Yeah, so that's the one thing. Anybody who kind of trades with this style of trading and recognizing imbalances and fair value gaps, especially when you get down to a 1 minute time frame, you kind of train yourself to push the button quick. So you're mapping out a lot of your risk during this time period where price is trading and is making its lower lows. And so you're saying, okay, if I enter here, my stop loss will be up here. And so you're calculating a lot of this risk before price even comes back into this zone. So when it does there, you kind of have your price mapped out. And so, each one of these candles is a minute. So, this is at least 15.
Yeah. So it was probably only up in that area for, a split second. If that, yeah, like a second or two before it went down. If the whole candle's a minute, I'm guessing. So you would have had to be pretty quick. There wouldn't have been a lot of. You would just be like, it's in that area. I'm going to get in at some point because my stop's going to be at the high, and you're just hitting the button, right?
Yeah. So really, like I mentioned before, in the actual interview portion, the 90% of my pre-work is done before I even sit down in the market. So each day, during these set times, I'm looking for this price to play out in this particular manner, right? So when I see this structure break and I see these lower lows, it's letting me know already that it's go time. And I'm just waiting for my structure to play out if I get in a potential entry, right? And so hand is on the button. So this whole time calculating risk, hand is on the button here, ready to push as soon as price enters and makes that higher, that retrace back into those levels.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Brilliant. Well, look, thank you for that, Blake. That was an awesome breakdown. Hopefully there's a few things in there people can take away. Before we wrap up, what's the best way for traders to get hold of you?
Yeah, you can find me at YouTube and Instagram at Brinks Trades. So that's BRINX Trades. Yeah.
Awesome. Well, look, folks, what we'll do is we'll put a link to those handles down below the video. And whilst you're clicking on down around there, what you need to do is hit subscribe, like, and that notifications bell, and we'll see you in the next video.